Aniket asks how mutual fund investment differs from investing directly in stocks and how much could be the difference in their returns.
Mutual funds gets you convenience. With 5,000 rupee you can diversify. A person is responsible for looking at companies, what to buy, what not to buy, and get you instant diversification. That is all there to it. Convenience, diversification. But if you have the time, if you have the inclination, and if you are a good investor, and you are also lucky, because there is always a component of luck and rigor, which translates into superior performance. So you stand a good chance. But it's important that you are fundamentally guided. You understand what you are investing in. You are able to ask those questions, satisfy yourself with an answer. Then, when building a stock portfolio, 2 3 things matter. One is that you are able to spot a good company at an attractive price, which will outlive, about which you don't have to bother it, and it is free from the risk of poor management, which steals money from the company, which is able to manage, keep shareholders' interest ahead of their petty short-term interest, and it is in a good business segment which is doing well and has the potential to grow and become a scalable, larger business over time. If you are capable of doing all this, you stand a great chance of being an equity investor, a good equity investor. And if till you are learning, do it with a small part of your money. Try your hand. Largely get this benefit of diversification and convenience till you are confident of doing it yourself. I think most investors, and the bigger problem is, if you want to be an equity investor, one is to do these things, but more important is not to do the bad things. When you get into stock, buying stocks yourself directly, you end up there is a great likelihood that you end up being a speculator. You are being bombarded with lot of stock ideas, lot of short term stock ideas, momentum stock ideas. You will be given some idea every day which is trading stock ideas, because there is a huge conflict of interest. Your brave broker wants you as an investor, you will benefit only if you buy some great companies and hold it for a long period of time for it to multiply and compound your money, while your brokers wants you to buy and sell every day. So here is a because he makes money only when you buy and sell more often. And if you are able to overcome all those, the kind of invitations or provocations that you will see, to trade and buy into momentum stocks, and do all the kind of things which a good equity investor should not be doing. If you are able to do get into that with clarity of mind, that what you are there for, what you will do, then only you should consider investing in stocks directly. Otherwise, for most ordinary investor, investing their small sums of money to accumulate something meaningful over a period of time, mutual funds or equity mutual funds turn out to be the best option.